Traders, Chris Pulver here. Happy Friday. I'm going to do a little test on the AV really quickly. I only have one screen to work with today. I am in Arizona, so just a laptop today, but let's see if we can get the screen share to work. Let me show the charts. Check out on YouTube. Let's see what's going on. I'll get logged in. So pushing live. Let's talk about markets. I'll just say it verbally. We understand risk in trading. Please and always use trade cap only. Do not trade with money you cannot afford to lose, whether you're trading stocks, options, futures, forex, cryptos. You know the deal. Let's have a look at everything today. So happy Friday. It's the 9th. We survived. It wasn't really a crazy week, but we're going to see where everything takes us today. So let's look at the SPY. Let me do a quick check on YouTube to see if we're logged in. So youtube.com/Chris Pulver. We should be pushing live. Yes. Just want to make sure all the comments are coming through. Excellent. All right. Chris, good morning. Ever, good morning. Ruth Ann, good morning. Ranji, good morning. David, good morning. All right, cool. So we got that up and running. I'll keep checking comments here periodically. But like I said, just working off one screen this morning. So let's just get to the charts. All right. SPY's at 395.07. That's pre-market. That is down a little bit softer from yesterday's close. Clearly, the 405 to 410 level that we talked about the last couple of weeks is resistance. A couple of articles I shared this week with traders in the trading rooms. BNP Paribas, something. BNP. They did some research on expecting a capitulation move into 2023. UBS was forecasting a 90+% of a recession in the U.S. next year. We've seen the deepest inverted yield curve since 1981. Charlie Bolelli keeps bringing tons of data, and we've got compression on gas prices, compression on interest rates. We've seen the 2-year note, so the US O2Y, the 2-year yield sitting at 4.32 off the highs. If we go to the 10-year, there's a couple of them on. Let's see if I can do the 2 and 10. Or let's go back to this. I think I have a sector. Can I load it? Let's load a new layout. I have one that has the interest rate sector snapshot. Here we go. The 3-month, the 2-year, and the 10-year. Let's take a look at this. So like I said, the deepest yield curve since 1981. If we do a percentage basis, no, I just want to do points. So we'll do regular. So we have the 10-year note at 3.51, the 3-month at 4.27. Wow, that's a big inversion on the 3-month 10-year. And then we have the 4.32 on the 2-year. So like I said, deepest inverted yield curve. It's been a pretty solid predictor. The 3-month over the 10-year has been, it's called 8 of 8 recessions. And the unfortunate thing is that window is anywhere between 6 and 18 months. So I don't expect great things for 2023 as far as, direction. I think that we're going to have a lot of uncertainty. I think we're going to have kind of a stability from the last 3 years. I mean, we had so many crazy moves and trends since 2020 that it's hard to believe that we're really 3 trading years into post-COVID, post-pandemic, and yet we're still trying to figure out where exactly the markets want to go. But that being said, I think down is a possibility. And just looking at the S&P 500, we'll go SPX since I have less stuff on the charts. Technically, this is a really solid bear market, right? Average bear market is 38% to the downside. Average duration is 15 months. Basically, we had our high for the year. So if we stretch this out for 15 months, okay, we have another 6 months to go. We stretch this down to 38%. We have a long ways to go. 38% on the S&P right now gets us down to about 3,000. So we've talked about this level all year. This is the COVID high. This is back in February 2020. We could press down here to, this is a yearly pivot from 2021. So think that the market's going to see a new high before it sees a new low. I could be wrong, but I feel like this area is probably still a bull market or bear market rally there. So we'll find out. All right. Morning, everybody. Morning, Tom. Morning, Ann. Good morning, Don. Thanks, Donna. Yep. So like I said, I'm just working off one screen this morning. So I appreciate everyone just keeping the chat active. Click that thumbs up button, all that good stuff. Let's get into other stuff for this morning. So currency strength chart. I was looking at it just a little bit ago. We saw the CAD getting a little bit softer this morning. And just had some news. Looks like everything just jumped around. Is that now or is that 8:30? 8:30. Okay, so we had some news this morning. What was our 8:30 news for the U.S.? CPI. Okay, so came in higher than expected. That means prices are higher for consumers. Well, there's your sticky inflation. The change of price of finished goods and services sold by producers. So higher prices, not a good thing. We'd want to see misses, right? You want to see misses in PPI. And again, this is not the case years ago, but here it is. We want to see lower prints and misses in CPI and misses in PCE and misses in PPI. So seeing this higher, this means that producers have higher prices. It means they're passing on to consumers. If demand remains high and things are higher, then inflation stays sticky. So that's where we're at. Okay, so bear market right now on the SPY. We do have some shorts in equities on demand. We took a trade this week or last week. We did a 400 by 405 on the SPY. And a couple of ways we can play that. This goes out to January. So there's my January 20th, 400 by 405. We got filled on that bear call spread for $3.10. We also have a couple of hedgy SPY trades out to January and March. Going into this 360 by 365, we collected like $7+ on that. So if those play out, then great. Nice little hedge profits. We also have VIXM longs, VIXM, and it's a 33 by 32. We did take a small loss on the November one. Next one is out to January and out to March. I think timing wise on these should be fine. So we could consider a roll, but I also think we're at a point where maybe actually let's look at this at the top of the hour for equities on demand. Equities on demand students, if you're wanting to, I think we put in a couple more trades on this VIXM. We do like a 31 by 30 or maybe even like a 32 by 30. And we just continue to kind of layer in some potential hedges with some income based on volatility. I do think that this level's held really nicely through 2021. We take a look at the VIX. You know, there's higher lows in volatility, but once we hit this 20 level, it responds pretty nicely. All right. What else we have here? Good stuff. All right, just checking the comments. Okay, currency strength wise, little jump on that news this morning. It's pretty quiet on the vertical axis though. The CAD's a little bit softer. Trades I liked yesterday in the trading room, Aussie, New Zealand. We're trading at 105.94. Go to the 4-hour time frame. Looking for a little correction back into this pocket at 107 plus, 107 to 107.50. We have some oversold conditions on the daily time frame, which is why I started the trade. I have 2 positions in that are basically this area. My break even is around 105, like 105.70. So I'm up a few pips, but I'm going after at least the weekly pivot, which is at 106.75. Ideally, I like to hold this towards 107.50 and make a few bucks on this. So it's just, you know, pretty easy way to trade this is just draw a trend line like so. If it breaks the right side of the trend line, much better getting long. If you're looking at a system like Master Flex, wait for confirmation on a 1-hour time frame just to see if it starts to turn green for us. Okay, so Aussie New Zealand, I like this trade to the upside. I told traders this week I'm willing to take this down lower. If this does drop a little bit lower, 106, 104, 102, and even parity at one point, I'll continue to scale in and then work the right-hand side of the trend line. A good video to check out in my YouTube channel. It's part of my Trading 101 series. Is just look at adding to winning trades. That's the type of position where I'm kind of anticipating if it goes lower, how am I going to stay in the trade and add to it? And I'll turn this into a nice profit. So that's Aussie New Zealand. I like that trade this week. The CAD Swiss has a really high bar count, and we're actually at some fresh lows today on the daily. So I did get filled. I think on the 1-hour time frame, we're at 500 plus bars, and that's a lot. I did get filled on this recent low around 68.60. I'm going after a couple things. One is this 200 EMA on the 1-hour chart. Also a pivot from this week at 69.91. A round number at 7,000 would be pretty awesome. Also on the 4-hour time frame, between this pivot, we also have a massive pocket way up here around 71.50. Now, it's obviously going to take more time to hit this monthly pivot area, hit the 71.50. Again, pretty simple. Wait for a trend line break, right? Okay, let me bring up, see if I can keep my drawing tool on here without making a distraction. So remember next week, how many rate decisions do we have? 4. US, so the Fed is on Wednesday at 2 p.m. We have the Swiss rate decision Thursday morning, the pound rate decision Thursday morning, the ECB rate decision for the euro Thursday morning. And that's going to be a wild ride. Plus, we have CPI for the U.S. on Tuesday. So buckle up for a wild ride next week, and we'll see if some of these technicals play out. Okay, good stuff. All right, so that's CAD Swiss. So again, trend line break will be nice. Just talking about this. So maybe a little bit more of an aggressive trend line there, taking it back up towards that weekly pivot. Once again, right-hand side of the trend, looking for a bit of recovery. But another spot to look at is compare this to oil. Right? Oil trading at 71.66. We did take out recent lows. Let me go to the daily time frame. Took out recent lows. There's a massive level of support between $65 and $70. And, oil's been sliding with strategic petroleum reserves getting dumped into the markets. We have price caps for Europe and Russian oil. We have China that's still on strict COVID lockdown, and demand has waned big time. So basically, oil is looking to set up where it started. We started the year right around $65, $70. It's coming right back to it. Some could argue that this is kind of a zero-sum game for 2022, which, considering I saw a lot of smart people in the industry that I trust their opinion, and they were talking about $150 to $200 barrels. So that forecast didn't work out, but we'll find out. I'm more of the spot right now that we find support between $65 and $70, and we find a range, maybe between $70 and $100. Maybe we don't break $100 for a while, but I'm still really interested in buying low. $65, $70. I think long oil is the play. That could be a good one for Q1 as well. So food for thought. Okay, good stuff. Yes, just checking comments. Everybody typing in. Smash that thumbs up button for me, please. So any questions so far? Good stuff. Yep. All right. Okay. So DXY, let's take a look. I still think the DXY has a little bit farther to drop, especially if we're going to see the market try to cling to some type of holiday rally, more downside potentially towards 103. But from there, if the US gets to 103, I would expect a decent pop to the upside, especially with this pocket and breakout point, having a high, having a low, pulling back 50%. We'll see if the bears, high, low, lower high, lower low, is that a play for the dollar, or is this high, low, lower high, lower low, lower high, lower low, and that's it? Maybe this is the correction on the dollar, past resistance becomes support, and then the dollar gets bid as the Fed raises rates next week. So the CAD did raise rates this week. The Aussie raised rates this week. Next week, like I said, we have CPI data for the U.S. on Tuesday. Fed on Wednesday expecting to raise rates 50 points. I think, let's see, did anybody see the forecast yet? Did they upgrade this to next week? We didn't see any type of anticipated forecast. So someone had said this week that the Swiss franc was expected to raise rates another 50 points. So this week's trading, we saw another 25 basis points out of the Aussie. We saw another 50 basis points, I believe, out of Canada. Yep, so 3.75 to 4.25 go into next week's trading. And we have employment news for the pound, CPI on Tuesday for the U.S. That'll be a big mover there. CPI for the pound on Wednesday, FOMC. This projection is there for 50 basis points, and then nothing. So I don't see any forecast. Somebody had said this week in the trading rooms that the Swiss is expected to be at 1%, so possibly another increase there. Monetary Policy Committee for the Bank of England. Again, I see previous is 3%. Are they going to raise rates? Possibly. The UK is coming out with some pretty soft numbers for 2023. They're looking at possible recession, possible deep recession, maybe the lost decade, all that stuff that nobody likes to listen to, right? Or everyone's worried about. And then same thing on the ECB. Previous is 2%. They raise rates pretty aggressively to get to 2%. Are they going to stay there? Are they going to go up another 50 basis points? What's the tone? Are we hawkish? Are we dovish? So it will be a big mover next week for a couple of days. And then we have PMI numbers coming out of the Eurozone on Friday. Okay. Let's see. What's up, Leonard? How are you? Nice to see you. I have anybody in the trading battle here today? Any trading battle peeps? Natalie, Dixie, you guys here? Martin? Usually the team pops in and says, what's up? Okay, so that's the DXY. Maybe a little bit more compression to the downside. Just remember the correlation. If the dollar index is dropping, the market's going to stay pretty stable and probably rally. So it's 9:17. We still have 13 minutes for the open. Pre-market's down a little bit. I think that 405 to 410 is a massive hurdle for the SPY. This is why we shorted it this last week. So we go out to January. Basically, I'm saying, look, by January 20th, we're going to be below 400. If we are, I'll collect that full 310. If we have another compression where the bears are in control, and by January, March, we're down to 360, 365, I'm going to take some profit on these big plays as well. So there's a little bit of protection right there. This week for stocks, I know Intel, I have a Harvard call for $30. It's probably not going to get called away today. I doubt there's going to be a rally. If there is, that's great, but $30 is, let's set a chart alarm at $30. How's the audio, by the way? Is it a little echoey? This microphone should eliminate it, but it's kind of echoey in this conference center. But I'm trying to speak right into the microphone. What's up, Kenny? How are you? Sure, PK, you're welcome. Understand. Yep. And remember on the dollar side of things, we were short for a while. I mean, I know that I got short prematurely on the dollar. Had to wait it out. Took some losses along the way, but stayed maintain the group position and ended up making some nice profits. We had a great basket run with Aussie dollar long, euro dollar long, pound dollar, especially with the flash crash at 104. That was a fantastic trade. We got filled at 104, took it all the way to 112, added more to it, took it all the way to 120. The Kiwi dollar was long. We got out of a dollar CAD position for profit. Dollar Swiss was the only one that I was hedging with, and I'm still going to trade long. But yeah, I just think the dollar index has a little bit more to slide. The correlation with stocks, which is stupid, honestly. The correlation is so ridiculously strong, where a weaker dollar equals a stronger stock market and vice versa. So it hasn't been that hard. It's just been so stubborn. The dollar's been strong all year. The stock market's been uncertain all year. You've seen an unraveling, 20+% off the highs. I think the peak to trough was 27.5% for the SPY. Like I said, I see. Well, I shared this week in the trading rooms. You're going to see forecasts that say the SPY is going to be at 420, and then you're going to see the SPY is going to be at 300. Somebody's going to be right. I just don't know where it wants to go and when it's going to get there. I would say that if we do have another push to the downside, there's money to be made on protecting your portfolio, right? So you can go long puts, you can do bear call spreads, you can protect. More importantly is protect. I put in a bunch of long puts this week on tech stocks. I put in long calls on, let me check here. So on Meta, not long calls, I meant long puts. I put in like a $100 or $95 long put for protection, and I went out to Q1. So there's a March 17th expiration for next quarter. And basically I'm just saying, look, if we have another flush to the downside where everything just drops, Meta, I want to have profit that helps me lower my cost basis. Amazon, trading at $90, I put in an $80 long put. So if it goes from $80 to 70 to 65, I mean, I looked back on Amazon's lows, this little COVID crash low, this nice little supply, or this demand zone rather, from 60 to $70. I could see us getting there. So it's protection. I mean, if we don't go lower, great. I'll just hold the stock and lower my cost basis. It'll cost me a little bit on that debit because I'll take a small loss. But if I'm right, it brings my cost basis, which right now is like 157. And I did a long put that's able, if I'm taking profit at all between $70 and $60, this will probably bring my break even down to like $80. So, that's what I'm trying to do, is make sure that my break even prices have to be much closer to the stock price on some of these tech plays. So Meta, Amazon, Facebook, we're actually doing, or Netflix are doing pretty well on. Netflix, I may get this called away by the end of the month if we're above 320. We're trading at 319 right now. So Netflix has another nice jump. We're looking to fill this gap. We have credit spreads down here for the next quarter as well that probably will not be taken out. So we basically called the low, 180 by 175. So there's some good income as we wrap up this year and go into Q1. But the market right now is pretty quiet, and expect it to open up for volatility next week, right? Big week next week, tons of news. CPI is going to move a bit. The Fed's going to move the market. Rate decisions will move like crazy for Forex. So I think next week we have to be ready for, is this a possibility for us to break the highs, or is this a possibility for the bears to resume control? High to low, lower high to lower low, lower high to lower low. Is this the same thing and repeat, right? If it is, so pop quiz. If the SPY goes this way, where does the dollar go? If the SPY goes down and our indices go down, where does the dollar go? More than likely. the dollar's going to go up, right? So that should be the correlation. But again, if we see it stay here, this break around 390, if we jump right back up, well, we could see another jump in the stock market. We can maybe have a holiday rally that gets up into maybe a false sense of hope. And then we'll see if Q1 pushes us back to reality. So it will be interesting on the timing of all this to see if the market's going to take this bear market momentum or if the market's going to let a little holiday rally just stay and stick around. Okay. All right. Good stuff. I think I've said it like 10 times. Good stuff. Good stuff. But it's just awkward just on one screen. I'm used to having 4. So it's a little different today. But anything else? So expiration wise, the top of the hour, we'll have equities on demand back in the trading room for Smart Trader. A couple of covered call expirations. Like I said, added some long puts on some protective stocks. We can take a look at some currencies this morning. So Aussie CAD, I still like long. I'm looking to buy dips. Aussie Swiss, if we break out above 64.50, I'm very bullish on Aussie Swiss above 64.50. Until then, I'm essentially building this as a potential falling wedge. So if this is high to low, lower high to lower low, lower high to lower low, if this calls more, there's a massive level demand around 6,000. I would be long at 6,000. But you can see that a right side of the trend line and a break above 64.50 is a pretty good play. We just need to get there. So confirmation would be great. I'll trade it north if it gives us confirmation, but we don't have it yet. Aussie yen, stay out of this one. Aussie New Zealand, I like long in the short term just to come back to a pocket pivot level. Aussie dollar. Next week, we will have more to make a decision on because we might see this coming right up against that 200 EMA like it is now. We took some profit on our long Aussie dollar right there, which was wise. It's still showing signs of maybe a weaker dollar. This might push back up into this outer trend line. I said the round number at 7,000. So check that out. But considering we're back at the 200 EMA, this could be an easy spot for something like this. Just a drop back down to this monthly pivot. So we could have some pullbacks, next week CPI, next week to FOMC. If we have a stronger dollar, then there could be some good short-term basket opportunities on dollar crosses. And we will be trading that next week. CAD Swiss, I still like long. I know it's at fresh lows today, but this is going to turn into a small position for me, which I'm totally fine with. CAD Yen, we already took profit in this one. We had a breakout at 104, took profit at 100. Swiss Yen, hopefully we can break down. This is the measure move from BOJ intervention high to low, breakdown to go to symmetry. That's around 136. Euro Aussie, stay out of that one for right now. Euro CAD. I'm looking to, this was a trade I set up for my newsletter this week. If we have a pullback, I was looking to go long. We didn't get a pullback. So what I'm looking at now is this is kind of a no trade zone, but I'm looking to short between 46 and 47. I'm looking to short this Euro CAD to drop a little bit. We've had this rally with this crazy long breakout. We didn't have much structure on the right-hand side. It's just jumped up 1,000 pips. From these lows, it's up about 1,400 pips with very little pullback. So if we get it high enough, I'm going to look to sell that. We get dips and pullbacks. I'm still looking to buy it to take it up to that yearly pivot. I feel like I was just a child marking on my charts and making no sense. So a pullback, I'm looking to go long. But if we don't have a pullback, then this drifts higher, higher, higher. We can scalp this in the near term, obviously, but I'm looking to short this up here. So just to illustrate that and annotate it a little bit better. Any questions on that? So far, so good? Okay. All right, that's Euro CAD. Euro Swiss, 98.44. Just hanging out. I would love to see a break above 99.50 on the daily time frame. I'd love to see the Euro Swiss get above this 200 EMA. If we get above 99.50, we can basically say let's get above 1.00. We get above parity, then it should be open space trading towards 103, 103.50, and these levels here on 105. Traders know this from the flex room. This could be a big, big profit. It will be interesting next week to see the combination of the Swiss National Bank rate decision plus the ECB on Thursday, how that pans out with this currency pair. So I also think there is, and this is true, we were so close to hitting it this year, but there is a yearly pivot that is available around 106.20. If this market is at all interested in hitting that yearly pivot, then we should be breaking above parity at 1.00, and hopefully 106 is in the cards. Now, like I said, my profit levels, I'd be happy at 103.50. I'd be ecstatic and thrilled at 105, and I would be jubilated at 106. But I'm still long on Euro Swiss. Euro pound, I don't like this one. Euro yen, looking for a chance to sell this with 4-hour confirmation. Masterflex students will have class today at 1 p.m. Eastern time. We'll talk about this one if it sets up for us. We're looking for this one to roll over red, and we can start looking at sell trades above. Euro New Zealand, someone's selling, any pullback, just sell transitional red. It's a nice trend. Euro dollar, we're trading at 105.35. This is a critical spot. It makes sense right now that this recent run on the euro dollar might see a correction. So next week with CPI and Fed combo, we might be heading down towards 102. And again, unless the Fed is really soft with their message, which I don't think they're going to be, I think they're going to try to get a lot of free mileage out of jawboning and commentary, not necessarily manipulating rates. They're going to raise rates, but we'll see what the path looks like going into the Fed meeting next week. But it makes sense that a correction is pretty straightforward, back down towards 102. But also the flip side of that is if this breaks and holds above 105.50, there's room to 108. There's room to 108. There's room to 110. We just talked about just the simple efficiency of a 123 breakdown all the way down to 96. It was 1,700 pips or 1,600 pips, and you just take 50% of that puts us right around that 108 to 110 zone. So we'll continue to monitor it. Okay, good. All right. Pound crosses. Pound Aussie. We were looking to sell it this week. We had some short-term confirmation. I had some traders that were acknowledging they sold the Pound Aussie this week. Same thing on the Euro Aussie. That's working out just fine. The Pound CAD. I did take another kind of bar count position. So I'm looking for this next week. We have 1, 2, 3. Next week's going to be 4 pivots in a row. And I took a trade, yesterday right in here. I took a trade at the high and my break evens in between. So I'm just going to go after a little retracement next week. Hopefully we can come back to this pocket areas, third weekly pivot, maybe a little bit more of a pullback. But I'll be watching the Pound CAD for a short-term trade next week. Pound Swiss. Hopefully we can break some fresh highs. Euro Swiss, Pound Swiss, we get, make higher highs. That's great. Pound Yen, leave that one alone. Pound New Zealand, nothing that hasn't broken out yet. Pound dollar, we're out of this trade from the lows at 104 to 120. New Zealand CAD, protect your profit. We're sitting at 87, which, like I said, I'm willing to sell this at this yearly pivot. So this was another trade that I said if we had pullbacks, we're going to buy dips. We didn't really have any pullbacks. We had like daily pivot pullbacks, so that wasn't very deep. So I didn't get the pullback that I wanted to take it to the yearly pivot. So instead, now that it's working its way up to the yearly pivot, I'm looking for an aggressive trend line, looking for a confirmation break, and I'll take it back down for a small correction. Okay, so New Zealand CAD, if it hits 88 to 88.50, I'm going to look to sell this. New Zealand Swiss, we took profit. New Zealand Yen, I'd like to see if this can turn over to the south. I just don't trust it a lot. So this one's going to be pretty simple. If we break below, this is a 4-hour time frame. If we break below 85.50, let me set a line right here. Right here. We break below 85.50, then I like short on the New Zealand Yen. But if we don't, there's no trade. It just looks like we're really sideways right now. New Zealand dollar, we're at 64. Next will be interesting. Either we dip to this monthly pivot or we continue to push higher with a weaker dollar. I mean, we're going to get moved next week. We're going to get a lot of volatility. Dollar CAD, possibly retesting the highs around 4,000s. Dollar Swiss, off the lows, I'm looking at this one. It looks like my analysis didn't hang on to the charts, but I had a potential falling wedge on the dollar Swiss, something like that. I like this trade a lot, actually. I'm long in a couple of spots, basically long here and just waiting. I'm willing to get long back around 9,000, but if we get a break, I'm looking to get long here and stack some positions, stack some orders. Target that monthly pivot, nice pocket. Even if this high to low, we just pull back to a 50% zone. I'll be long that dollar Swiss for a little correction. Dollar Yen, out of the trade, profit window was hit on the higher time frame. No trade on dollar Yen for right now. So, all right, little currency recap. A couple things for stocks and options. Bear macro outlook. What are we doing? It could be up to 410, 420 for a holiday rally, or we could have the bears stay below 390. And take us down towards fresh lows into Q1. Think about it. I mean, fundamentally, not much has changed, right? Central banks are still trying to make sense of how they can tighten without, shocking the markets too much. They're trying to drip in this transparent, commentary. But the reality is inflation is still sticky. I think the biggest thing we're talking about here in the US is, are we going to have a recession? Probably. Are we going to have a recession and still maintain high inflation? I think that's what the Fed is trying to avoid at all costs. So to do that, they have to stay firm on their language. And so, next week with Powell's commentary, we'll see what they say, right? But we're going to see 4 rate decisions next week, plus CPI data. Looking forward to trading with everybody next week. If you have any questions, let me know. Thanks for being with me this week. It's been a good week in the trading rooms. We've got some good short-term trades that I like. Aussie, New Zealand long, CAD, Swiss long, pound CAD short. Like those bar counts, New Zealand CAD. I'm getting short around 8,800 at that yearly pivot. So we'll talk about those next week. Equities on Demand students, I'll see you at the top of the hour at 10 o'clock, wrap up class. And Masterflex students, I'll see you today at 1 p.m. for a little recap today. We're going to keep class fairly short and sweet. We'll just review the inputs. We had a new batch file sent out this week. We have the numbered inputs, so we can just review the organization of the robot, set up a couple of trades with some pending breakouts with that high-low logic. Okay. John, is that you for email? Sure. I saw the email that was just asking about, do we have class on Wednesday? But I just did a video. I think it was Wednesday. But I'll take a look. Good stuff. All right, sweet. All right, buddy. Thanks a lot. Happy trading, lots of profits. Happy Friday. Have a great weekend. And I will be traveling back home to Utah on Sunday. Okay. All right, buddy. I'll see you at 10 o'clock. Equities on Demand students, Masterflex. See you at 1 p.m. And have a good weekend. See you, everybody. Bye.